Let's now look at how do you ascertain whether or not a particular item of capital gains is taxable. Like in case of any other article, the two regulations which are relevant here are the provision of the Income Tax Act and the provision of the treaty. So the first step that you do is you find out whether or not an income is taxable under the Act. If the answer to that is no, the case becomes fairly simple, which is that the tax is not applicable, the income is not taxable. This could be in the case of long-term capital gains on transfer of listed securities where securities transaction tax is paid. Right? In case of those securities, if there is a transfer, it is not taxable under the Income Tax Act. When it is not taxable under the Act, I don't pay any taxes. I don't even need to go to the treaty unless there are specific reasons for that. But if the item of income is taxable under the Income Tax Act, then I need to see whether Article 13 or any other article which might be renumbered as such but with the title capital gain is present or not. If it is present, then I need to see the taxability as per Article 13. So if it is taxable, I will see whether or not Article 13 provides me some concessional benefit in terms of non-taxation, right? If it does, I'm going to opt for the provision of Article 13 and pay taxes accordingly, right? Pay tax or not pay tax, depending on whether it's taxable or not, right? But if Article 13 is not there in the treaty, then I need to see whether Article 21, other income, is present or not. Now, there is always a debate in terms of whether once Article 13 is absent, you need to go and see the other income clause or not, or tax it under there, or you just tax it as per the domestic laws. The tax office has been taking a stand that if this answer is no, then you straight away jump to the provision of the domestic laws, right? And if it is taxable, which is the case why we are moving here, then you pay taxes under the domestic laws. There has been a case, not in the context of capital gain, in the case of Mediterranean Shipping Company, where the issue was that if the article relating to shipping profit was not available, right, whether the taxation should be under Article 21 or under the domestic tax laws. In that case, it has been held that if shipping profit article is not there for a shipping company, you still need to apply Article 21, right? Drawing the same analogy, if Article 13 is not present, you will still see, the better view seems to be that you should see what is the provision in Article 21, right? If Article 21 is present, see what are the provisions there, and it may be taxable as per Article 21. But if Article 21 is not there, then the tax has to be paid as per the provision of the domestic tax laws of India, which is the provision of Income Tax Act 1961.